Hello everyone, this is Andrew McNair from SWAN Capital with our October 2013 video update. In this month's video, we're going to discuss some of the events that moved markets in October that you need to know about. And we're also going to talk about what you can expect to happen in the days and weeks ahead. Now, as always, please be sure to review the following disclosure statements after this video. October was a volatile month for stocks as investors faced down the government shutdown, debt ceiling debates, in the third quarter earnings seasons. Now, despite the turmoil, markets still turned out a very good performance, with the S&P 500 and the Dow and the NASDAQ all setting record highs for the month. The S&P 500 gained 4% alone, the Dow 2.7%, and the NASDAQ with 2.5%. Now, as you may have noticed, this government shutdown, federal budget debates, and the debt ceiling crisis dominated headlines in October. This was all because lawmakers were unable to pass a 2014 budget bill that many federal agencies were forced to shut down operations because of on October 1st and send thousands of federal workers just like my father and contractors home without pay. The shutdown dragged on for weeks as relations between the two parties deteriorated to the point that it seemed like no one could agree on anything. Lawmakers were finally able to resolve the differences, however, just in time to prevent a default on payments to the U.S. creditors on October 17th and pass a bill raising the debt ceiling until February 7th and funding the government through January 15th, basically kicking the can down the street, which they're pretty good at up there in D.C. Unfortunately, this means that Americans may be going through another round of bitter political fighting in the new year. While it's too soon to know the full extent of any possible economic damage, one report suggests that this 16-day government shutdown cost $24 billion to the economy. This means that the fourth quarter growth may slow down and slow down the growth that we might have expected from all this holiday shopping that will be occurring in the next few months. Now, let's take another angle. Let's look at the Federal Reserve. They held a scheduled FOMC meeting at the end of October, but decided to delay the tapering of its bond buying program for another day. This was not unexpected, though, because the government shutdown caused the delay of economic reports and data collection for them to do their decision-making, leaving the Fed economists without a clear picture of the current state of the economy. Third quarter earnings season kicked off in October, and thus far the story is one of profits fueled more by cost-cutting and accounting acrobats than by really revenue growth. But even with this lowered expectations, companies still struggled with a sluggish economy and weak global demand. Still, there's been some bright spots, and let's take a spot to highlight those. The first one is the tech sector is growing strong and showing strong growth, and smaller domestic firms are also doing well, while the real estate market is still pretty steady in growth. Now, looking ahead, markets will turn their attention to the rest of the earnings season, as well as economic reports for October. While the government shutdown is still muddied, the data analysts will be looking for signs of continued job growth from that data, and hopefully we'll get some upbeat consumer sentiment as we head into the all-important holiday shopping season. Now, I want to share with you some upcoming events that we have here at the SWAN Capital community, and that is our Social Security class on November 12th. You don't want to miss the classes at University of West Florida, so check out our upcoming events page at swan-capital.com. Now, once again, this is Andrew McNair with SWAN Capital signing off for the month of October 2013. I hope you found this commentary interesting and informative, and we'd love to hear from you. So drop us a comment in the comment section below, and if you ever have any questions about what you heard in this update, or would just like to discuss your personal financial situation, please give us a call at 850-380-9558. That's 850-380-9558, and we'd be happy to talk with you.